Good morning, good afternoon, and good evening. All right, what do we got going on today? It's the 14th day of the invasion. Oh, jeez. You can see the currencies kind of lean into the trading channel. That's what it really comes down to. And all the gobbledygook we've been hearing of late of more cryptos. Why would anybody want to buy U.S. crypto? I don't understand it. Why would anybody want to buy Chinese crypto? The objective and the asset value of cryptos is they're not government related. And that's the oddest part of all is somehow or another these bureaucrats keep on thinking that it's just the blockchain itself that everybody's rushing towards. And that is not it. It is the independence. Ever since the quantitative easing era, people have their doubts about central banks and governments, currency, and so forth. And so they're not running from a lack of security as much as they're looking for something separate from the quantitative easing universe. You know, the central banks and the Federal Reserve who've created this quantitative easing and doubt the confidence of wanting to be a part of it. And we're on our 14th year? Let's see, what's this? 2022. It started in 2008. Yeah, so we're going on the 14th year now of quantitative easing. And so, you know, cryptos, the asset of a crypto is the security of the blockchain, and they're separate from the central banks and governments. That's what it is. It's a separate asset. It doesn't have to be stored like gold, or it doesn't have to be, guaranteed by governments. You know, that's exactly what it's all about in the end. All right, so you can see here today the Swiss on the, let's get the arrows going here too. You can see that right there. The Swiss is in the 92.80 area, and it's banging up. You know, it's 3 days of hinky green bars. The white line is moving up on the J4X. As you can see, the pressure's on. And we are now, as you look over here on Chicago Quant, you see there, we are at the top end of the range. And you can see we're trying to dance our way slowly through the weekly buy signal. Again, signaling that they want to own dollars. That's what it really says. You know, that's what the story is. It's saying they want to own dollars and they don't want to be short other products. Now, a little curious here, you can see that it's a yellow or it's a down candle developing there at the same time at the top end of the range. So there's some pressure there, you know, like as usual. They stay inside these ranges because, again, what are crypto investors always looking at is trying to get away from quantitative easing and government guarantees and central bank manipulation and, you know, just all that stuff. So, you know, that's why the average currency is staying inside its range over the last couple of years. And, you know, we learned this from Secretary Mnuchin back in 2017, that it finally it kind of gave us the tip-off that the ranges that we've been seeing are basically enforced by the central banks and the Federal Reserve. All right, from there, let's take a look at, let's jump over to, let's move back over the other way too at the same time. Let's see what the euro is doing this morning. It was firming up. Last I saw it, looked like it was in a buy. Let's put it up on J4X. And there it is right there. You can see a little green hinky. See the white line is into the buy territory also, and at the bottom of the range of the two independent stochastics. And we call that the Manhattan Project indicator. And then from there, we take a look at it through Chicago Quant, right there. And you can see we are flirting with the daily buy right there. And what else can we say about that? You can see the weekly is still a good distance off. So this could be, it's bouncing off this is a Fibonacci range that we seem to have identified over the last few years, and it's staying inside of it, and central banks seem to enforce it, and we see how it Fibonacci's off of the range. And I can say this about that is, as a trader for over 40 years, or 5 decades now, I guess, since the late 70s, what we really see here is the technical analysis, Fibonacci and moving averages and stochastics and was it the MACDs and all the old tools have never been more accurate. And obviously, what we call the Manhattan Project Indicator, or the Manhattan Indicator over here on J4X, is the most accurate of all of them. Watching the hinkies of all the public indicators. And you can see here the two stochastics battling with each other. One is a fast-moving stochastic, overlaid to a slow-moving stochastic. And then over here on the Chicago Quant, we're showing you our proprietary work that we've been using for over 40 years now, 4 decades, and developed it 5 decades ago and had no idea exactly what we developed at the time. Just a lot of runtime on good old mainframe, and the end result is it seems to have paid off dramatically well in the 7 and 8 figures and 9 figures. So and the end result is that you can see here we are on a daily, just like the two stochastics here, because we smooth our formula with a stochastic, and that's why this white line looks like the stochastic, because it's smoothed by a stochastic and is just hours ahead. That's all. It's ahead of the time. And you can see here, same thing on the bottom one. This is a weekly chart versus the daily chart here in the center, or daily indicator. And then you can see the bar chart, or in this case here, it's a candle chart, and you can see it's moving up. And there we are. That's the euro. And so bouncing off of the range, I see gold this morning moving down a little bit, so maybe there's a little less scare in the marketplace. Obviously, when you have the particular character or clown we have in our White House, it makes the world always nervous. And then you have the biggest bully on the block, Mr. Putin, over on the other side of the ocean. So between an incompetent and a bully, we are kind of trapped between a rock and a hard place. I think that's what the world is trapped in at the moment. It'll change again. We'll get back to the adult supervision very soon, especially the cavalry is coming, and we'll see that going into 2023, and we'll see the panic at the end of 2022 of the politicians realizing that they have overstepped themselves. All right, from there, we take a look at the British pound. Let's see, right there, we'll put it up on Chicago Quant. You see it's trying to lift up. It's playing with its weekly range also right there. And you can see the white line is moving up. But again, the weekly signals are just not joining in yet. They are oversold, you can see, but until they get through at least start to turn back up. And let's see, we scrunch the Chicago Quant just to observe. They have found ways to go lower, let's put it that way. You see that there before they start to turn up. Once you see the blue and the green start to head towards the time manifold here, these mirror imaged lines, or the standard deviations, we use standard deviation of our mathematics also at the same time. So we've taken some of the good old tools like 1 standard deviation, 2 standard deviation, and stochastics, and taken our formula and smoothed those with those good tools. And that's why our math is always ahead of the curve, ahead of everything else. And let's go over to here on J4X and put the cable up there. There it is. See, it's trying to turn up too at the same time right there, just as it's doing right here. Whoop, cancel. Trying to turn up there at the same time. And you see all this red. And then you see these cute little red dots showing you the same thing. And we're using a candle again. Candles are on this particular one, probably because somebody asked for it more than anything else. We don't usually. I mean, I like candles. I like candles. I have no problem with candles, just like I have no problem with Hinky ASCII bars, but I don't use them during the. I don't really use them myself, But they are a better. I use my math. My math is obviously more ahead of the curve, so there's no reason to really worry about it. But in this case here, you can see the dots. The Hinky ASCII bars are trying to emulate our dots with a 68% correlation, and not counting the time lag of these things here, but that's all right. Our math is, this is on J4X. This is the best tool you're going to get in the public arena. Free indicators. All right, from there, let's see where we go from there. From there, we slide over to the Turkish Lira. Let's see what the Turkish Lira is up to. Quiet day again. People are coming in and out, but nobody is asking any questions. So we just keep on rolling along. Traders, you're welcome to interfere. You're welcome to ask a question. Say, hey, what about this particular product or that particular product? Can we see what you think about that, what your math thinks about that? We love conversation. We love looking into new things. So it doesn't matter what you want to look at. We'll look at it. We'll stop what we're doing and we'll go and look at it, because that's part of the entertainment. The first entertainment of me doing this is the fact that I'm able to give you my opinion about different things, using my mathematics and my years of experience. Then, second of all, I love we're in a what I call a proactive world. Whereas when I was young and I was a trader, we were, on the trading floors in particular, everything was reactive. Orders were coming at us. We responded. Now in a proactive world where there are no exchange floors, no one's really working a trading desk. We do have some trading desk people floating through here. But overall, most people are not working on a trading desk or trading on a floor. They have to be proactive. They have to figure out what they want to trade. They have to think and use tools to understand what they want to do. Be long, be short, be neutral. We're not in a reactive world. And so, and many people give advice like as if they're still in a reactive world, and we're always upset about that. And that's another good reason why we like to talk about the markets here is, we're in a proactive world now. And so more ideas, the better. That's what it really comes down to. More ideas, the better. You never know what someone's going to see or think and go, wow, I didn't even notice that one, because there's so many different products out there. All right, over to the Turkish Lira. And we'll first take a look at it in the dollar Turkish Lira frame, right there. You see it's been marching up. It's been firm. It's up at the top end of the range, as you can see here on J4X. And then let's slide over to the Chicago Quant side of it. And we'll take a look and see what it looks like there. And as you can see, we are all of a sudden, in the dollars terms, we're banging against our rectangle. You see that there, that range that we believe is established now with the change in policy in Turkey of giving free puts to people who purchase their currency, which makes it a lot cheaper to keep it firm and steady and less volatile. And for those that don't know what a put is, that's an option. They were legalized again in 1976, and that's 75 going into 76, which brought all us math people into the marketplace, removing the zero-sum factor. And then we go over to, which is now the lead, we look at the Euro Turkish Lira. And you can see it's at the top end of its range there, doing its thing. You see it's moving up also here. And let's see what it looks like over on Chicago. Right there. And you can see it's still inside the rectangle. And in a daily buy for a few days. And our weekly buy is firming up, which is just more of an example of the strength of the dollar. That's what it really comes down to. The dollar is strong. Money is nervous. I saw outflows this last month in China. Over 70 billion yuan bonds sold, and the money moved out of the country, which equates to about $10 billion, I guess, something like that. I mean, it's again, we're not totally captivated by China here. We see the numbers. We follow all things through math and the numbers, and China's just not that big of an economy. It's more of a colony of America. It's an odd situation, very odd, because America doesn't really have colonies. Our legal system is not set for colonies. So when you get this much of status from the American marketplace, that's what it really is. It's a marketplace, and they're in there buying Chinese goods left and right and investing in China. That, to me, is the colonization of the country. But we don't take equity in it. So, in other words, it's private equity. It's not like the old days when a country would colonize and the government would take control of the country. In our sake, or the way we function because of our system, we allow much more commerce. So 70 some odd percent, 73% of exports of China go to the U.S. of A. And that's why they have so much wealth at the moment. And that's why there'll never be a world reserve currency, because without America, they're nothing. I know it seems harsh to say that, but that's what it's all about. So, in other words, if they took over and threw America away, they'd lose 73% of their exports. So then all of a sudden their economy shrinks down that much to the point where they're only about 25 to 30% of the size of their economy. Then there's no way in the world they can be a world reserve currency. Hence, they don't have a floating currency at all. Actually, it's fixed like the way the Hong Kong dollar is. All right. From there, we go to Canada. Oh, Canada, right there. And this has been functioning totally out of character. Normally, Canada follows the oil market and the metals market, but in this case here, they just lean right into the, the opposite. I mean, you would think that we'd be down at 122 or 124. Instead, we're at 128. That is usually the norm for the Canadian. It follows oil. And oil is at, 120 right now? Let's just take a quick peek and see where oil is. Let's see. Spot oil is trading at 119.80. Right there. You see it's playing with a daily sell. Weekly has no problem. Obviously, it's not even remotely breaking down at all. And there's just a little profit taking and, hoping that Mr. Putin and Mr. Zelensky and the Ukraine people, come to some form of peace. And maybe that's a part of it there. I mean, obviously, if it would, we wouldn't see all this calamity in the oil market. Let's see now. And we'll show you gold. Gold's backing off today, too. There it is right there. It's still in a buy, no problem. And our weekly is very firm. We went into the weekly in the 118 area. And, now we see ourselves in the 2,000 area. So it's been a $200 move up. Our daily buy, last one was in the 1920 area. And it ran up $100 and some odd on that. So it was a big winner chicken dinner. And if anybody doesn't understand or wants an explanation of our math, we can easily do that right now and give you an example, live example. So if someone says, wonder what that's all about, say, oh, explain please. You don't even have to give a name or anything else. Just say, explain please, and we will. All right. From there, we go over, because of gold, moving down and being this strong like it has been, we would assume the South African rand, which is another currency pair that normally, and I say that generously, normally follows the trend of metals, and gold in particular. And there it is right there. But it's been really not. It's been going up the same way gold has been going up, which is wrong. Usually it goes down against, in other words, it gains against the dollar. But in this case here, just like Canada, the currency has broken away from one of the norms of its characteristic. And as you can see here on the Chicago Quant, right there, the South African rand. You can see there that the South African rand is just kind of sideways, a little down today, not too bad, but it's got green dots going on. And that says there's strength. And you can see the daily is breaking down. You see the white line here breaking. Where's that mouse in again? There it is. Breaking down right there. You see it pressing. So, that's what it's supposed to do when you have gold running through the roof going towards all-time highs. It should be way, way, way down, but it's not. And again, that's that nervousness of geopolitics and so forth. And that's, the wild and crazy thing about our world, the geopolitics. I myself like to think about making love, not war, but unfortunately it is what it is. And, I see people say things like, can't we have peace and so forth? And it would be nice, but this is our natural characteristic. It is. It's our natural characteristic to be loving and hating and upset and happy. And, it's just part of nature. Free will. All right, from there we go over to, let's see if they're doing Ruble today. I saw Ruble at 127. There we go. So now they've got the Ruble trading, there it is right there. They're saying 102.32. And that is today? Okay, so we're starting to see some real activity in the Ruble trading. And that's a dollar pairs Ruble. And let's see what it looks like over here. Right there. We have Ruble up at around 117 at the moment. So there's a bargain right there. Grab it at 101. I guess. Sell it at 101. That's what it'd be, I guess. You can see our math is moving up still. We haven't had a trade since Friday. There's Friday's trade? What is that? No, wait a minute. It's still not trading. Okay, so in the States we're not trading. We're still not trading it. We stopped trading it on Friday. And this is the first trade I've seen in about 13 days on J4X. So they filled it in. There is the 28th. They've filled it all in. Last I saw, like I said, is 127. I'm going to go check that. Let's see what we can do about finding out exactly where it's at live right now. I've got Ruble trading. Where is it at? I'm going into an interbank market to look at it. There it is. 116.18. 116.18. Or I guess 116.79. That's where it's at the moment. 116.79, down a little bit. On a weekly basis, it's up almost 20%. On a monthly basis, it's up 55%, and on a year over year, it's up almost 60%, 59.17. And not seeing any changing quotes at the moment. It's quieted down a little bit. We'll see what they do. But that's the interbank market I see at the moment. All right. I guess there's no bid and offer. You can see that temporarily unavailable, but at least they're starting to put some quotes into the Dukascopy system. And we were able to trade it all the way up until Friday, and now we're in the States now are not trading it. So it's definitely a challenge all the time. Seen it yesterday up in the 140s, 150s. Seemed to settle out more in the 120s. And you can see, well, you can't see it, but my interbank market is showing me it's at just sitting dead there at 116.79. It's moving around. I can see that because my percentile is changing. It's down 2.67 at the moment. It was just down. I thought it was down 2.5 something a few ticks ago. But I don't think anybody's really making any really solid markets in the product. And like I said, we have not had a live market on my machine, in chart-wise since last Friday. All right. From there, we go over to the yen, playing with the 15-year highs. Right there. There we are. See it slowly inching its way up and closed in a daily buy yesterday. Let's put that line in there. There we are. Hey, Robin. I agree. Don't be shy. Give me something to talk about. Give us a discovery of something new to trade. How about that? That would be more interesting to see how the math works on it. You get a chance if you give us something that we never trade, you get a chance to see us plug it in and watch how accurate our math is. All right, from there, let's see. So, let's say one more thing about the yen. See, it's flirting with the weekly buy too at the same time. So let's put that in there. You see there, emphasizing that it's playing with the weekly buy. And at the end of the week, we'll put the little green, this big, thick green line in there if it closes in a weekly buy. And then maybe this is the run to the higher teens and taking out the 5-year high that we've had floating around here. Ruble trading down 2.63% now, trading at 116.84, down 4 points, I guess, for the day. Now it's at 3.38, trading down at 115.94. We're getting some action into it. 115.94.70. Interesting. All right, and we're going to keep I'm going to keep the interbank market up just to be able to see what's going on. Obviously, a lower ruble will probably put pressure on gold and oil and so forth. It'll be an example of, some type of change from this calamity type of world we're in at the moment. All right, from there, I'm wondering, what's going to happen. Let's see. You can see here on J4X the white line moving up too, and I think, Robin, I think we should try to write up something on the yen, because the yen could be breaking out of this 5-year high if we go into that weekly buy. So maybe tomorrow, if they show the same type of strength and they get through this Wednesday happy hump day, maybe we're going to see something. So that might be the next thing to write about. We'll wait. We'll give a day or two to it. All right. From there, we go over to the Mexican peso, and it's been doing the same thing. It's been roaring up, roaring up. There we are. And just like on J4X, you can see the white line is coming down today. Still green. Same thing here on Chicago Quant. Still green dot. But it's also roaring down. It's trying to basically top out in there. Let's see if we can get that arrow, change it widthwise. There we are. You can see that pressure starting to build and get us back into the channel. It's been a little odd ever since this big wild move up and breaking the channel of the 2.5 year period had something to do with Mr. Biden, not Mr. Putin at all. Mr. Biden, the president of Mexico, and the prime minister of Canada. It freaked it out, sent it through the range that we had been seeing for a long while, just staying inside its range. You know, just playing with it, bouncing around the bottom end of the range and then going up to the top end of the range and rolling over throughout the last couple of years. And then he had this conference with them and freaked it all out. And the range has been kind of a little bit wider now. I'm not sure what that's all about, but I know there were payments going to Mexico and he cut them off. So there we go. Hey Kelly, how you doing? Euro Swiss. Let's see what Euro Swiss looks like. Euro cable, Euro Lira, Euro Swiss. There we have it right there. There we go. You can see it's flirting with the daily buy today with no problem after being in a sell for the slide here. Matter of fact, at the time we were thinking it was going to go into a weekly sell, and it did. You see the little circle thing there. Now we can take this and put the line in there. There we are. And now this is giving you a warning to not be short after being short from here. And it's battling its way up pretty hard, and it was a nice win right there. That's pretty cool. It's been a little choppy. Let's take a look at it. You can see it gets into a trend and normally holds on to the trend for a little while. It went into the weekly buy here, and it was in a daily buy from here. Let's put those in. And it rode for a while up. And then let's put another one in there for the sell right there. And then let's put another one in there for the buy again right there. And then let's put the sell in there again right there. And then let's see, that pushed it into the buy. And then it really vacillated. Look at that. It jumped into the buy, sell. Is that a sell? Yeah, that's a sell. But you can't take the short. You only can take the longs because we're in a weekly buy at that point. So, and that's how that works too, traders. You want to coordinate when you're trading the hard delta or the spot. What you want to do is you want to coordinate when we're in a daily buy and a weekly buy, you're long. And when you are in a weekly sell and a daily sell, you are short, and that's how that works. And then when they're conflicting with each other, you're in a neutral stance. So in other words, you would take all the shorts from here and just trade the shorts because we're in a weekly sell all the way down. And then when we get into a weekly buy, you would only take the longs. So in other words, this starts to warn you, goes into a daily buy there. You see the strength the next week starting to kick in here. It's still in its daily buy. It gets into a weekly and daily buy here at this point. Once the lines start to move through the zero line, let's put that zero line in there, like so. You know that you can be playing the upside but not the downside. And then after that nice win, tells you to sell. You're not getting short because, again, why, traders? Because we're in a weekly buy at this point. So all you do is take the long. So there's your next long right there. And another winner chicken dinner. Sometimes the trades are fantastic. Sometimes they're okay. Almost 9 out of 10. It's like 8.5 out of 10 times it's a win. And then you can see you get a sell here. And again, we're in a weekly buy, so you don't take the sell. You can see it only lasts for a day or two or a couple days. We go back into the buy right there. And it goes up for just a very little win, which a lot of times can be a big warning that something's going on. In other words, it's changing its trend. The dailies can indicate that type of thing. And then, let's see, let's put the buy in there. So it's like that. And then, and we use the dots too to tell us if it's a go. The three indicators together give us the directional. And then it goes into a sell here. You can see we are flirting with the weekly sell at this point. And then once it starts to break down, you know that there's going to be pressure. And it's, we're in a daily sell here. We're in red dots. And this product is now underneath the weekly number, the 0 line. So we know that the pressure is on the downside. And that's how this whole thing works. And so where we are now is that the weekly is still way, way down. And we're getting a little bounce. Yesterday it gave us a red and a green, which is a warning that volatility is kicking out. And then we get a green, and we know that there's going to be some upwardly pressure until we see another sell. And as long as this thing is hanging out down in here and this goes red again, then what it'll be is more pressure on the downside. Let's see, how long has this been used for trading? From the early 80s for trading. I backwardly fell into it when they created listed options. I had invented the indicator almost the same year. I guess it was in Hatfield in 77 or 78. And so then I was trying to, do quantum theory with it, and which works real well with that too. And then I got a job at the American Stock Exchange because of the options. Because they removed the zero-sum factor, so a lot of us in math automatically in physics jumped over to the financial community, figuring we could self-fund ourselves instead of doing graduate school. And so I dropped out of that and went that way. So it works really well. It's a really good tool. It took years. Probably the markets taught me more than anything else how successful it is. Because trying to use it in an esoteric type of universe is always tough. Trying to do things like that, would be nowhere near as insightful as seeing it work every day, predicting future events. Stochastics was a thing out of the Manhattan Project. It's a known math formula, but it was used, to try to predict. It's kind of like Lorenz and Hamiltonian and things like that, trying to show you future events. All right, or future movement. Even look, the relativity paper is called, moving objects on an electromagnetic field. And then years later it was turned into, they changed the name of it to relativity. But that's what scientists and mathematicians and physicists and so forth are always trying to do, is understand where things are going and if it's predictable before the event occurs. All right, long time, yeah, definitely a long time. Let's see, and you've been watching it, what, Robin? 30 years, 35 years since the 80s? No, 90s, something like that. 80s, 90s, something like that. All right, let's see at this point you can see that's it. That's the what product was that? That was the Euro Swiss. All right. And where did we leave off then? We'll, unless someone wants to see something else. If you want to see anything else, just shout it out. We'll go look at that too. From there, we go over to the metals complex. That's what it is. We go to energies, and we'll go back to the metals, finish off the metals, and go to the energies. So let's check it out. Oh, and I'll give you a quote on rubles. Where's Ruble now? 116.96. Down only 2.53. So they're trading it around. Rubles are seeing some action, ACTION. All right, let's head back over to gold. And let's put, we're going to put silver. Well, let's put gold. There's gold. And you can see there it's Still green. We're red already on the Chicago quant side of it. Our proprietary math. You can see the curve coming. You see the same curve right here with our J4X. So the pressure is on. You see the weekly is not being disturbed at all at the moment. We'll have to give that. We'll have to give it a little time and see what it does from there. From there, we'll take a look at silver. There's silver. Silver moving down also, flirting with the sell. We're still in a green here, and we got a red dot in silver too at the same time. Oh, no, that's not silver. There's silver. That's gold still. There we go. Same thing. Matter of fact, it's actually piercing. In this case, silver is actually piercing the 0 line already. See it right there? It's a minus. See it on the box on the side here? Right there. It says minus 0.03. Pressure's on. We've only been in a weekly buy for 1 week. And it seems like we made new highs today, and we're now making new lows. It's an outside day, as they would call it, on the bar chart. All right, from there, we jump over to copper. Let's see what they're doing. Copper had that big outside bar thing going on. They really adjusted everything. It was really crazy over in copper. Let's see, where's it at? Right here. There's copper. And we're below it also here. That's how the charts went out this morning to our customers there. We have a charting service that uses our, we show our math. You can get charts sent to you. And then you have here already piercing solidly down. And this piercing, or not really piercing, this has been in a weekly buy since the 410, 415, 20 area here. I guess 420. It drifted back down to the 15. And is that 15 or what is that? No, that's not 15. That's 32 low. Okay, so it drifted down to the 32 area. And now, it ran slow and sloppily. Look at all those daily sell, then a daily buy, then a daily sell, all over the place. Sloppity-doppity. And again, you don't take the shorts because why again, traders? We're in a weekly buy since the 440 area, I guess, or 430 area, something like that. What's the low there? 438. So that's what's really going on with the copper. And I guess, you have the nickel market all upside down out of the London market. What did it do? It doubled in price, something like that. And so they've got the exchange closed. And you can see copper is trying to figure out how to deal with this whole thing. And then we'll take a quick look at platinum. Platinum seemed to lead this whole adventure up over the last 3 months. You can see here since basically December, the end of December. And platinum went from 950 to 1200 inside the weekly. And it tried to go into the weekly sell here, but it failed by the heart of it, but just by a thin number. But it failed, and it stayed in a buy. And you can see it went into the sell here, and then jumped back into the daily buy here, the 1100 area, and then it ran 100 points. And so that's pretty much the action in the metals complex. All right, from there, we drift over to the energies. There is spot oil. You can see we're flirting with that. And then over here on J4X, we're going to put up, let's see what we're going to put up over here. We're going to put up Brent. Brent's 124. I know yesterday we saw it at 128, so it's moving down. You can see on the J4X, the white line is trying to find a way, either way on the scaling of it. It's underneath the dashed line at the moment. These green hinkies will start to dry up, and we'll start to go into the red again if this thing keeps on sliding on the downside. And then, let's see, what else can we say about that? What we do is we go and we take a look at back months on West Texas. So you can see the front month that expires in like within another week and a half, or a week or something like that, around I guess it's the end of next week it'll expire. We take a look at June. So we look at the back month, and the back month is doing the same thing. It's breaking down, and it's trading at 110.80 versus, what is it, 119? So it's like a $9 premium. So I mean, it's almost like a $10 premium. 9 to 10. Let's see, 1950 versus 1090. So 11. So it's like $8.50, $9 premium in the front month, which shows you that how much demand. We call that a contango, and it just shows you how desperate spot is at the moment. In other words, they need to deliver it, so it's the prices are higher, and obviously whatever's scaring the marketplace, if it stops scaring it, like the Ukraine Mr. Putin situation, then what happens is that we're going to see this product move back down again. But there are refineries that need to stay running. I understand that they cannot stop running. In other words, once they get going, they have to keep on going, because if you turn them off, it takes time to get them to start. It's a big chemistry set, and so it takes time to get it to run again. And so, like I know there's one refinery that I think it processes 365,000 barrels a day in the United States. It's actually owned by Saudi Arabia, and it has to process that much every day or it shuts down. And then when it shuts down, then it doesn't open up again until they get it all working again. It's not like a light switch. It's a chemistry process, so it's a procedure. So they have to rush in every day and buy oil. And a lot of other refiners have the same situation, so they have no choice. If it's trading at 125, they got to buy it at 125. If it's trading at 150, they got to buy it at 150, and if it's trading at 90, they got to buy it at 90. In other words, they have to keep the process of the plant running, or they lose money when it's shut down, and they can't just turn it off and then think you can turn it back on in a matter of 10 minutes or an hour. It takes a couple days, and that means losing production on 365,000 barrels a day. It's a lot of money to lose. So that's why prices rise, because of the demand. And these factories can't say, hey, why can't we just turn it off, wait for a day or two and see what's going on, because it gets too damn expensive. All right, from there, we go over to, we go to natural gas. Let's see what natural gas is doing here today. Our natural gas, went into a sell yesterday. You can see it's down in the, what's it trading at today? About 4.5 a metric, a foot or something like that. It's a cubic foot. That's it. A cubic foot of natural gas. That's how they measure it. Cubic foot. And you can see the pressure on it there. You can see we're also pressured on the weekly side of it too, right there. And then we take a look at that over on. Go Eurocentric, and we'll take a look at this trading in Europe in euros. I'll find it. We'll find it. Right there. And it's trading at 24.43 a cubic foot. Whereas here in the States, we're trading at 4.5. So it's almost 10 times more cost. Because Europe is being starved with energy problems, shutting down a bulk of their atomic power plants, which is like the cleanest of energy. And then what else is there? I heard there's as many as 125 atomic power plants in Europe closed. And then you have, they don't have much oil production, so they have to buy foreign oil. And Mr. Putin is the closest to foreign oil. And even when it isn't the most farthest oil, I don't know why they're playing with that when they'd be better off just dealing with the Saudi Arabia and so forth, but they don't. No doubt that it's a giant system, and you can't just run from one product to the other without affecting global markets. But, it does seem odd to I guess they're trying to appease Russia, hoping that they can bring Russia into the fold. And obviously he's firing artillery at a neighboring country in Europe, in the central part of Europe. So obviously appeasing him doesn't work. Fearing him doesn't work. All right, and so that's where you can see Europe trading at 24.43 a cubic foot, and we're trading at $4.50 a cubic foot. So that's definitely 9 times more. All right, from there, see, that pretty much does it with the energy. So from energy, we drift over to the stock indices. Let's see what's going on with stock indices. Here is the Nasdaq 100, or known better as the Tech 100, moving up, as you can see. We have a red and a green. You see our proprietary math is trying to turn up. You see our weekly is still down. So there's a lot of issues, and they're trying to figure it out. Let's take a look at it on J4X. There it is right there. The Tech 100 is the Nasdaq Tech 100. You see it's trying to roll up also at the same time, just like our math here. So you see it right there, and you see it right here. It's got all these reds going on. We're already jumping into our beginning of the green. Oh, yeah, beginning of the green. You can see that right there. Today is the 9th. And let's give you a little visual of it trading live intraday. And there it is. Let's put it up on the screen. There it is right there, trading live. Let's see if we can do something here. Where is it at? I'm going to move this up. Can we move that up? Like that? No, that doesn't do it. Let's see if that does it. There we go. Right here. There it is live. And as you can see there, same math, same concept. Gets into the plus side. It has a tendency to go up in value. Goes minus. It has a habit of going down. Gets into a plus side. It has a habit of going up. And we got green and red dots. And this is in a what we call 936 contract bar. We use spatial mathematics for our time. And we do it in Teslas. So 396 is 1 Tesla. And obviously you double it. That's a 2 Tesla, or you Fibonacci it. You can go to a 1.618 or 1.50 Tesla, so forth and so on. And you can see the same thing with the manifolds. We went into a sell right here. You see the pressure on the downside right there. But it's still up, as you can see right there, up 200 and is that 67? Let's see if we can find that. Maybe what we do is move that down like this and put it on this screen here like that. Maybe we'll see it a little bit better. And so as you can see there, maybe we make that a little bit darker too, like that. That makes it a little bit more visual. And you can see right there, we're up 296, 297. It's starting to turn. We're getting a green dot and a red telling us that they're trying to turn. Now we need to see this math turn up. You see the box right here. It's at 812 at the moment, 809, 802. It's ticking away live, and it's trying to turn back up. And obviously, as you look at the daily, and you can see it there on J4X and that, it's pressuring its way to the highs of the day. The high today was 13,591.75. So let's just call it 92. And so we are trading at 569. So 69, basically 70. So it's about 22 points off its high of the day. All right. From the next, we'll take a look at Right there is the S&P 500. Same situation at its highs of the day, and another red and a green going on. You can see the green line trying to move up to the 0 line. Histogram same way, but our weekly's still down. And as we take a look at that also on J4X, like so, right there, see the same pressure. You know, we've been in a sell for a bunch of days. Product is trying to turn back up. It'll start to reflect that soon on J4X. Oh, where's the lines? You don't see the lines. Let's show you where the Manhattan thing is. There we go. Then, let's see. Let's take a look at that on a day-to-day basis. And where is it at? Right there. This is a Tesla and a half. You see it went into the buy right here. And it's finding a way to go up. It's fighting its way up. And it had gone into a sell right there. I found a way to go down. It was a very small little bounce there. No real clear signal. No solid green or blank. It was all reds anyway, so it was telling us be careful. At the top end of the standard deviation, again, careful. Just like it is now. It's trying to do the same thing. And there was the last good buy right there. That nice ride up there. And that was the next best sell right there. Good ride down. It seems like we're going through some type of shift here. We'll see what they do, and I wouldn't be surprised if things don't change. In other words, I don't know, something, markets are just, if nothing else, they're probably closing out. Now, last is right here. This is the Dow Jones Industrial Average. Same thing on a daily. You can see it's trying to turn up. We're playing with the weekly on this one. This one, the weekly was plus earlier today. It's down. I'm not sure how that happened, but there you go. Minus 10. It was just minus 12. Doesn't take much to move it. And let's show you on J4X. Right there. It's trying to turn back up on the daily. It will begin soon if we stay like this. And then last but not least, let's show you what the intraday of that looks like. There it is right there. And you can see it's trying to get into the buy. It's been in the buy since right there. So it went into the buy. It did not go into the sell, which is curious. Oh, I'm sorry. We run two different ones. That's right. So we're watching really the center one on this one here. And this is a more longer term view. It just shows you that the pressure has been up. And when we went into the sell here, we see this acting strong still. So we're not the bravest to be a short. It was okay of a short, you know, you can see that, but it's already trying to turn back into a buy, and we got a red and a green right there. You can see it's trying to turn up here, and this is already turned up with this whole long strength thing going on. So maybe it's going to be, once they open up the U.S. market here in an hour and 2 minutes, it'll go, whew, maybe it'll really take off. All right, that's it, traders. It was a nice day talking with you. Everybody be safe, be smart. People in Ukraine, keep your heads down. God bless. Happy trails to you until we meet again. Happy trails to you, to our Dukascopy trading friends. Later.